Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI, and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Danielle Park, editor of the popular blog Juggling Dynamite and president of Venable Park Investment Counsel Incorporated. Welcome back to the show, Danielle.
Hey, thank you, Jim.
Danielle, are Canadians maxed out? Do we have any more wiggle room left on our mortgages or credit cards?
That was quite a headline that came through this week, wasn't it, about the study that was done by the trustees in bankruptcy. And they declared that in the survey that they did, 48%, up from 46% last quarter, said that deteriorating financial stability was a major problem for them and that they had no real plan for paying back any of the money they'd borrowed. Now, the numbers are a little bit circumspect there because, with 36 million people or so in the country, if half of them were literally bankrupt, you would have sort of 16 million insolvencies or something like that. And in fact, there's only about 130 people a year so far that are filing for bankruptcy. So I think a couple of things there. One is that many people are technically, insolvent, but they sort of stagger on like that for a long time, either just barely making ends meet or just paying minimums or, skipping payments on one to make payments on another debt. And so very often they're not actually declaring bankruptcy yet, so you wouldn't see them in the filing numbers. But anyway, it does seem like that might be an overstatement somehow in that survey, that many people could actually be, on the verge of bankruptcy. But I think that the point maybe is that many Canadians feel they're intensely stressed out financially from all of the different credit facilities they've accumulated. And from the fact that they've had stagnant wages for much of this time, and certainly hasn't kept up with the cost of things like housing, financed items like education, housing, cars, all these things have gone up in value even as they've stretched payments longer and even in a relatively low rate environment. So I think it really speaks to the fragility of our entire population and, of course, more to the point of perhaps, significance for everyone in terms of the consumption that drives, 60% of the nation's economy is ultimately from Canadian household spending. So, and we know the lion's share of whatever economic growth we've seen in this slow growth period over the past decade has come from consumer spending and people buying real estate and associated services. So, we seem to be very much into the downside on the real estate cycle now. And if it's not driving demand or spending through our economy and Canadian households are not able to continue spending at the pace they were, which by all accounts they aren't, then it seems like the Canadian economy is sort of out of great growth areas at this point. Yes, oil's rebounded recently, and the price of Canadian crude has gone up in that, but, that has been a very volatile sequence, and it's very difficult to know, at what point that's going to take another dramatic plunge. We certainly know there's a lot of speculative activity going on in that space, and not so much in the capital expenditure end, which is really what ultimately helps the economy if you see capital expenditure and R&D and that sort of thing. So, we know we've got higher gas prices in the country, Jim, and again, maxed out citizens who are barely making their payments cannot easily absorb a big jump in oil prices or in gas prices, and indeed they've had to have that again recently. So, I think this all points to why the Bank of Canada yesterday backed off their hiking bias, went to a completely neutral dovish stance, and hacked off, let's not forget, 29% of its growth expectation for 2019 for the Canadian economy, they had been forecasting growth of about 1.7% as early as recently as January, which I thought was over optimistic. And indeed, yesterday they lowered that to 1.2. You know, this is really barely beating stuff, Jim. And of course, economies are a bit like people on a bike. If you try and stand still, you tend to fall over. You know, it's the momentum of going forward that kind of keeps things going. And I think the other big thing we're really seeing is the layoff stuff is really starting. You know, there was a jump in U.S. employment for initial claims this morning above what was expected. We saw companies like 3M, who are, you know, a bellwether for the overall economy. They make tape and packaging and things that go with goods and shipment. They disappointed greatly with their forecast, and they announced they're cutting 2,000 people out of their workforce. It seems like every day now we're getting a major corporation saying they have to cut costs, rationalize, lay off people to try and meet their numbers. So I think that seems to be a trend that's certainly not just in Canada. I mean, as we've said before, this is a business cycle. No one's got rid of the business cycle. It's not that a business cycle is a catastrophe in itself, or that that downturns can never happen, or that they're the end of the world. The difficulty is when people come into them so ill prepared, as Canadians are today, right? When they haven't set aside savings, when they've come into this with a 1.1% savings rate, which Canadians have had in recent months, because they've been just barely making payments on everything else. That's when you really don't have any buffer to ride out, and that's where the downturn tends to be much more magnified than it would have had we prepared for it properly.
Right. When you talked about high gasoline prices, Greater Vancouver, the highest prices in North America, where if you have to put high-test gasoline in your car, it's over $2 a liter.
Yeah. So, you know, again, this is the kind of factors that are driving people to take public transit, to walk, to bike, to car share, and all that is ultimately very positive. I think that's all the right part of how we resolve this, but it definitely means lower consumption. So part of the whole point here is that to get from this state of fragility to a state of greater strength, we have to rebuild the buffers, right? We have to build up savings again. In order to build up savings, since we can't just dramatically increase, wages and income right across the board, on the turn of a dime, it takes, quite a lot of time and policy adjustments and various things, to be able to get wage pressure back in the system. So the only other way to really rebuild those buffers is to have lower costs. So that comes from consumers being more frugal. It comes from figuring out the sharing economy, which many, many people are doing. And certainly, this idea that you don't want the biggest, most expensive house or property to carry. There was another article this week about the Hamptons and the luxury property market there. The Hamptons being, in New York, and it's been this very, prestigious area where typically the high-end category was $3.8 million and up over the last 5 years. But that is the category of homes that has a huge amount of overhang right now. Those type of properties just aren't selling. There's something like, triple the supply right now of those properties on the market than there was a year ago, and it's the most in 7 years. And the experts there are pointing out that at the current pace of sales, it's going to take, 7.5 years to clear the supply that's currently available for sale in that area. So this is sort of like what we're seeing in other hot areas, all over the world, and certainly in, the most expensive parts of Toronto, Greater Toronto area, and Vancouver, where, both the demographics where people are older and not wanting to take on or wanting to downsize, the younger people who are not interested in taking on that kind of overhead and expense and stress, who already have debts of their own, are just not, reaching for those properties. And so you have that big gap between what buyers are able or willing or interested to buy and what sellers are trying to unload. And in the middle there is where the price has to somehow meet or close, And I think that, realtors are just continually telling, by all reports are saying that they're trying to encourage people to lower prices. But of course, that can be very sticky, especially when when you're an older seller and you're sort of like your nest egg, your retirement savings, so to speak, you see as wrapped up substantially in your house. You're not in a quick rush to dump it and give away what you thought you were going to have in the bank afterwards. So it's really, it's a phenomenon that's happening everywhere. And I think we should be prepared for it because it's so obvious why it's happening. And, the mean reversion part of this cycle, as I always like to call it, yes, we've had this galloping decade of debt on debt on debt and dramatic escalation in some asset prices that were directly connected to that debt. But now we have the forces of debt and demographics and slowing growth to speak for all that leverage and high price that was put into the system. And that's going to be the equalizer to pull everything back down.
Is there anything people can do to prepare for tougher times, or is it too late for them?
Oh, gosh, I hope it's never too late, Jim. Never too late to learn, never too late to do better. And the answer is just be more frugal, waste less and want less, just be more innovative with how to meet your needs in terms of what your aspirations are. We've been talking about this for so long, but, things that lose value, depreciating assets, things that are non-productive, these are not the things that one should be borrowing to buy. So generally speaking, things like cars, things like household technology and furnishings, and even their home itself. If your home itself is a shelter, it's not going to produce any income. That means it's going to be a net drag on your pocketbook. And yes, you need somewhere to live, but when you start doing the math on, if you stop thinking of it as an investment, and I would suggest to you in the next, period of years, people are going to stop thinking about housing so much as an investment or a speculation and more as a shelter. And if you're thinking of it as just a shelter, then you start comparing it, for example, to available rents and how much free cash flow you have to give away in order to have that shelter. And all of a sudden, the entire equation looks different than, in the frothy times when everyone was banking on galloping gains to the upside, so they were not concerned about things like negative cash flow or, whether they were paying a lot. They just assumed it would always be worth more. And I think we're in that sobering period where people are starting to realize, hey, that may not be the case. And in fact, if it's not going to be the case, it could be stagnant, lower, and sideways for up, 10 years and more, which has been, we had a 15-year upcycle. Real estate tends to be sort of equal and opposite in the other direction. So it's one of those long cycles. And so, yes, you can prepare. The best way to prepare is to lower your debt, to avoid it wherever possible, to lower your expenditures, to look at your budget and figure out where you're spending, a lot that you don't necessarily have to spend. And in some people's cases, it does require them to do a restructuring. Either go see a trustee in bankruptcy, because people often wait, longer than they should have. In other words, they're already in an impossible position. They can't possibly pay their way out of the mess they're in, and they wait a couple more years before they actually go to see someone for professional help. And in that time, marriages and children and families and health are all dramatically impacted in a negative way, often by that kind of financial strife. So, we have to get through the working down, restructuring, paying back, consuming less and saving more in order to get to the other side. And so it's not too late for people to make those adjustments, but the worst thing you can do is stick your head in the sand, live beyond your means, have a lot of concentrated exposure to assets that are in bubbledom sort of pricing range, and not expect to have to give back or not consider how your balance sheet will be impacted if the asset side falls and the liability side remains the same. That's the very definition of evaporating your net worth.
We'll have more with Danielle Park right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN AF. surrounded by world-class gold deposits and mines. Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Danielle Park. Danielle, have special interest groups taken over what's written up in legislation in our governments?
Well, evidently, yes. And I think this is, again, not something that's necessarily new, but I think that as we've discussed before, complexity can be the cloak of great deceit. And I think that we've been through a period of a lot of dramatic deregulation of large industries, of ethical principles, of Chinese walls between sales and advising arms between within corporations and governments. So we've had this revolving door of lobbyists, coming out of industry, going into government, coming out of government, going into industry, and advising the companies on how to get their way in the government and all this sort of thing. And what you end up having is, politicians that are very beholden to paid interests. And indeed, what happens also is because they're constantly having to appease and trying to raise funds for these very expensive campaigns, they often leave the legislative work to, the last, sort of their last priority, and that's where these special interest groups step up and say, hey, we're experts in this field, we'll write the legislation, and it ends up being rubber stamped by the governments in power. And then it turns out that the fine print is all in favor of the special interest groups and not at all in favor of the broader interests of the country. And so that's certainly been the case in the United States, but also in Canada. We've seen that it seems to make no difference whatever government is in, whether it's, whatever the political party, it doesn't seem to matter. It seems that the political interests are greatly swayed or defined in terms of how the country's laws go by the powers around them. And so that's certainly a problem. We need to have, I think, less complexity, a great deal less complexity, and more clear lines.
The Fraser Institute released a study saying tax regulations have increased by 72% since 1990, and they did things like how many words are in the tax bill, how much the stack of paper weighs, and so on. Do we need to have simplified taxes? Would that greatly reduce the cost of your personal life and the cost of government?
I think it's exactly what we're talking about. It's interesting that during that period of all that complexity, what's actually happened is tax rates have come down significantly. So what ends up happening is people want to carve out, exceptions and provisions, little A sub I's, that benefit this group over that group. And I think that we would be greatly benefited by simply having some, as I say, very clear rules about, a tax rate that applies, much less in terms of loopholes, and that way you wouldn't have to have so much complexity, and you'd have a better chance of collecting the tax that you think you're going to be collecting. Because that's the other problem with this environment. Of course, the boom bust, the periods of dramatic acceleration, and then when growth falls off again, government budgets tend to be swung around with the cycle, and they tend to fall just as expenditures are really kicking in from the downturn, and so deficits gap. And we've seen deficits gaping everywhere that we look right now, certainly in the U.S., and they're getting bigger in Canada, and we haven't even got into the, quote, official recession part of this cycle yet. So one can just imagine how much more we're going to have deficits in our tax collection. And that suggests to me, again, that we're going to look for ways to increase tax, because they can only cut spending so much in the weak economic period, since their job is supposed to be to offset the downturn. So it's going to get a lot more complicated here.
We'll have more with Danielle Park right after this.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Danielle Park. Danielle, are Canadians selling themselves a bit of a lie when they put their stuff, their recyclables, in the blue bin?
Yes. This is a very uncomfortable topic, and I must say it only came to my attention, within the last couple of years that all the sorting out of our trash and putting them in different buckets was actually just the appearance of doing something, because in reality most of the plastics that we were setting aside were actually going to landfill, being shipped to foreign countries where they were burned or buried or just end up in the water system. So I think it's definitely been part of the problem, our sort of out of sight, out of mind, into the bin. 60 Minutes Australia did a big segment, which I put on the blog just last week, on the recycling lie, and it's hard to watch, but the reality is that we need to ban non-biodegradable plastics. If you can't recollect and reuse, and it doesn't break down in the natural environment, we shouldn't be using it as packaging. And that's really where we're at. We're literally being buried in this stuff. And, recycling non-biodegradable plastics into other non-biodegradable plastics is really not a good solution in the end, because it still is on the earth. And how do we, get away from these piles of stuff that are accumulating everywhere? So we definitely have to have this is an area where we need a strong policy response that is not a bunch of complexity and loopholes and exceptions, but just a ban on certain types of packaging in certain applications. And then I can guarantee you there's a lot of other technology that's sitting there in the wings ready to go, where they've been doing all sorts of synthetic biology and figuring out how to make plant-based substances, how to go back to some of the stuff we've been using for thousands of years as packaging, the burlaps and cloths and, reusable bottles and jars and all sorts of stuff we can be doing. It's just we got away from that in the last 50 years. So as I've often commented, the population of the earth has doubled in my lifespan. So clearly, it's not that anyone really anticipated perhaps that the packaging they began, using, the plastics in particular, 50 years ago was ever going to become such a plague. But here it is. It is, because of the number of people now using these single-use containers. It's become an incredibly big problem. So what we need is a strong policy response, and then we'll have great innovation. Because on the other side of this, people are always, horrified at the thought of breaking with the status quo, but they don't realize that that destructive creative activity is what always happens, and what unleashes the next big round of innovation and investment and jobs and all sorts of good stuff to come. So that's the reward for making the change, and the cost of not making the change is becoming completely unaffordable.
Well, of course, we know about the giant plastic islands in the middle of the ocean that's choking off the wildlife there, but what people don't realize is that the fish that you're eating are full of plastic.
And this is the other thing, when we make things out of, some people have been talking about making, clothes out of recycled plastics. The problem is when you wash the clothes, the pieces of plastic go into the water system, which we ultimately ingest, or, animals and fish are eating it. So it's really just a very self-destructive cycle, and it doesn't make any sense at all. And the only way that it's gone on like this is because the people who are producing and using the packaging have not been held accountable to the costs that we are all having to absorb, both to, in our health system, to harm our health and in the water systems. And so now that we know that it's become this massive problem, we know what the response has to be. And I find that, everywhere you go, people are aware of this. I think it's actually creating a great deal of anxiety in the population. The people that are thoughtful are appreciating that everywhere they go, they see these bags now and they realize, or these containers. And I've often lamented that the people that are producing the, quote, healthiest food are doing all these wonderful things in non-GMO, organic farming, all this great stuff, are typically the ones that are producing a lot of their stuff in this completely non-recyclable or non-biodegradable packaging. So you have this big disconnect where you're literally, do I buy the stuff that's spliced with glyphosate, Roundup, and going to cause me cancer, or do I buy the stuff that's organic but in this horrendous packaging that can't break down? And I think that's a really terrible choice, and consumers need to push back and just say, we're not okay with that choice. We're not going to continue to buy this stuff. Figure out a way to give me a package that's not toxic, or to put it in a way in which I can pick it up without having to have it all in all these plastic packaging. It's certainly possible. I mean, I've been saying we've made this shift in our own, in my own house, and we have dramatically reduced the amount of packaging that we use. You can do it. It's just that, out of sight is not out of mind anymore. You really have to be aware of it, and we consumers are part of driving the whole evolution that needs to happen.
Danielle, thank you so much for chatting with us.
Hey, thank you, Jim.
My guest has been Danielle Park, editor of the popular blog Juggling Dynamite. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet, our YouTube channel, Talk Digital Network. If you have questions for Danielle or any of our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.